Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, April 21st, 2009. We start with a look at the Aussie Yen pair, which found a low yesterday at 68.15 following a 370 pip slide in yesterday's session. Yesterday's fall was led by a sell-off in equities, which increased risk aversion. Today, yen crosses saw a reversal in their fortunes, pairing most of the gains seen by the yen yesterday, especially in today's New York trading. Here, the Aussie clawed back 61.8% of yesterday's fall, meeting resistance at the 70.50 level. The RBA released meeting minutes last night detailing why it was necessary to lower rates to 3%. Domestic demand is weaker than earlier expected. In Germany, producer prices decreased 0.7% on the month in March, a sharper decline than was expected by economists. That put the annual rate at negative 0.5%, the largest drop since a 1.1% decline in September of 2002. The annual rate turns negative after peaking at 8.9% last summer. A second release from Germany showed the ZEW Economic Sentiment Index moving back into positive territory for the first time since July of 2007. The index rose to 13.0 for the April period and reflects positive sentiment towards government stimulus packages and low inflation rates that support private consumption. The Eurozone index also improved from negative 6.5 to 11.8. The better-than-expected ZEW release helped the Euro-Yen pair stall its recent decline. The pair found support at 126 and rallied 180 pips or so to trade near 127.80. Today's move could be a counter-rally inside of a downward-sloping channel that started last week. If so, one should monitor how the pair behaves when it runs up against its downward-sloping level of resistance. The euro-dollar pair also found a short-term bottom, with support holding at the 1.29 level 3 times overnight. The euro rose to test the area right below 1.30, a level that was still lower than yesterday's high. If risk aversion returns the rest of this week, or there is data from the Eurozone that is worse than expected, the pair may see a further leg of declines. In the UK, March consumer inflation slowed to an annual pace of 2.9%, matching forecasts, while the core annual rate inched up to 1.7%, surprising forecasts that had called for a slight decrease. On the month, prices were up 0.2% compared to a 0.9% increase in February. Meanwhile, the retail price index saw its annual rate turn negative at negative 0.4% for the first time since 1960. The pound-dollar pair, which fell 300 pips yesterday, reversed most of those losses after finding support at 1.4470. By noon time in New York trading, the pair had set an intraday high at 1.4710. We'll see where the pair decides to go next. If today's move is a correction to the sharp fall yesterday in the last 3 sessions, or if we may be seeing the start of a new phase of pound strength. So far, we have retraced 38.2% of the fall since hitting a high at 1.5050 last Thursday. We have been detailing several yen crosses today, and the dollar-yen showed a similar pattern, climbing, with most of the gains coming in New York trading. U.S. stocks were higher today as financials rebounded from yesterday's fall, which helped the pair stage a 100 pip rally. In testimony before Congress, Treasury Secretary Geithner answered questions regarding TARP and the state of the economy. Geithner said Treasury still had $110 billion left in TARP money, and he acknowledged that bank lending is not at the levels it should be, though there were some signs that credit markets may be thawing. He also outlined 4 key ingredients to help the economy come out of its recession, which include the Making Home Affordable program, the bank stress tests, consumer and business lending under TALF, and a new program to provide a market for legacy assets. The Bank of Canada cut interest rates by 25 basis points to bring interest rates to a fresh record low of 0.25%. That move surprised markets. The statement said that such an accommodative monetary stance will remain at that level until the end of the second quarter of next year. Growth is expected to decline 3% in 2009, a deterioration in the forecast from even 3 months ago when policymakers predicted a 1.2% decline in growth for the year. The surprise interest rate cut worked to weaken the loonie initially, with the US dollar-Canadian dollar pair jumping to the 1.25 level in the immediate aftermath. However, as stocks in the US and Canada rose today, the sense of risk appetite pushed the pair back down to the 1.2325 level, which was lower than where the pair had started the session. Still, the pair held most of its gains from yesterday's session. Coming up tonight, Japan will post its trade balance, while Australia releases consumer inflation data for the first quarter. Overnight, the UK will post its main employment figures, including the claimant count, unemployment rate, and earnings index. Also, the Bank of England will post its meeting minutes. Tomorrow, the fundamental docket is light. Canada will release its leading index, and the US posts data on housing prices. And that wraps up our Forex news for the day. Thank you for joining us here at cmsfx.com, and as always, happy trading.